What is cracking, lads? We are back with another trading video here to go over Friday's trades. Got plenty of content here, some good things, some bad things, plenty to learn. Let's dive right into it. First things first, we went positive on the day. Pretty good day, I would say, up 385. First thing to do when you're done with the trading day, of course, is to journal your trades, write down your orders. I did it during the day, but in case you guys forgot, you can go back. Just go to account reports right here on the side. Make sure to go to your orders, order status, filled if you just want to see the start and end of your trades, boom. So I had 3 trades today. One small loss in the beginning with one mini, came back, made a lot of the money back, and then I had one last macro trade where I sized down appropriately to limit my losses if I'm already winning and to further maximize my profits if I do want to get a little more oomph out of the day. So I would say this last trade was a mistake, and I will go over that in a little bit, but I'm still glad I did it because, again, got more content for you guys, something to learn about discipline and walking away when you're having a good day. So let's go over to the charts. We don't need this anymore, so we can just get rid of that. All right, so starting again, following my recipe, right? So didn't get rid of my charting from the day before because I thought it was a pretty good day. There wasn't much to erase. Just had to go back and adjust some liquidity levels, just making sure that we are working within our ranges. So for me, if I haven't gone over this yet, my recipe really boils down to going on each time frame and marking my major liquidity levels and keeping track of what's been taken recently, what hasn't been taken, and that can help me form my bias. So always start on the 1 hour. The way I like to think about it, because I'm always on the 1 hour, the 15 minute, the 5 minute, the 1 minute, and the 15 second, I like those time frames because each of them is multiple times of the next higher one. So like the 1 hour has 4 15 minutes, the 5 minute has the 15 minute has 3 5 minutes, the 1 minute has 5 1 minutes, and then the 1 minute has 4 15 seconds. So I see some traders always, do like 1 hour and then they go down to like the 30 minute, for example, or like they'll be on the 15 second and they'll go down to like the 10 second, for example. And I kind of don't like doing that because I like the simplicity of, the information. Like in my experience of trading, usually I start making mistakes when I look for too much information. So I like keeping it simple. Like it keeps me from looking for bad setups, right? It keeps me from flooding my brain with too much information that I don't need, and it's just keeps my consistency going. So I always start on the 1 hour. There's nothing to change. No major liquidity has been taken in the past few days, so we drop immediately down to the 15 minute. Here was yesterday's market open, so I kept that there just for reference. Today's was right here. I had that 15 minute sell side still there, I believe, from the other day. And today, when market opened, they made a very large jump up and it created a new buy side liquidity level. And that's really where my first starting point of the day was opening the charts around 9:30. I was actually really busy doing finals today, and I should not have been trading today, which is kind of plays into the point of why I shouldn't have done my last trade of the day, because I kind of was already getting lucky getting some trades in today as it was, and the last thing I needed to do was overdo that, right? Because well, you'll see what I mean in a few minutes. So dropping down to the 15 minute, let's go ahead and actually market replay this today because I think it would be productive to see like the action as it played out in the morning, so you guys can kind of understand where I'm coming from. So I know the screen share is probably terrible, but I apologize for that. I'll try to go a little bit slow so that you guys can catch all the movement. So really just starting out, just ignore that charting for now, but you can tell here the first, 15-45 minutes of market open was just ridiculous jumps up. And right here is the first moment where you can say, if you're not very experienced in trading, you should not be taking a trade right now, right? So this is the 15 minute. I'm already probably after I write my 15 minute buy side, because I did wait for this move up to finish before I really started to like get into the charting. So that's kind of why I have that level up there first. But I did already drop down to the 5 minute. I already dropped down to the 1 minute. I left this 5 minute sell side since, I wouldn't really say that's the 15 minutes since when I make these buy side, sell side liquidities, I look at, like, for example, when I go to the 15 minute, I don't say this is the 15-minute sell side, although for a 15-minute, price action, it could make sense. I'm still going to keep it as this one because notice how there hasn't been a single change in the trend in that time frame. So the same is not true for the 5 minute. This is why I'd say this is a 15-minute sell side and that's a 5 minute sell side, because then when I drop down to the 5 minute, you can see here that it does shift enough to where you can say there's a different sell side. So like now this is my range for the 5 minute instead of the 15 minute being a larger range over more time. So that's kind of what I like also about having few time frames and focusing on those time frame liquidities, because again, I'm not looking for too much information. I'm just looking for basic things that can guide me and give me ranges to work with so that I know what action to look for. So I dropped to the 5 minute, and you can tell here from literally 9:30 to at least 10 o'clock, it is nothing but pumping, literally just pumping. And a big part that plays into this is the news. So if you guys don't know already, you need to be checking this website right here. Thanks to my mentor for showing me this as well, because this will tell you the news every single day of market open and intraday trading. It'll tell you different country news, this country news. The only thing you need to pay attention to if you're trading in the US are if you have any US news after market open and if they are higher than low impact. So like 8:30, this kind of news isn't too important. Market hasn't really opened, not high impact, but something like Chicago PMI. Look, guys, I don't know anything about the news. I don't watch any news. I don't do anything. All this is telling me is that there's going to be higher volume, right? There's going to be people reacting to the news. That's what matters about this. It's not that, I need to go research what PMI even means. I don't even know what that means, right? It doesn't matter. Same thing here, 10 o'clock. So only thing I'm paying attention to is that there's going to be high volume coming in 9:45 to 10 for some reason, right? And all I need to do is either stay away from the action or have a very, very defined plan on what to do when these news come out. So because I was busy this morning, I had no issue just avoiding this entire pump altogether because I need to wait for more price action to really give me some structure to work with so that I can decide what trades to take. So let's drop down to the 1 minute now and play a little bit more of the market open here. So boom. So after this high is placed, the first thing I do is place this Fibonacci retracement. So remember from the last video, you want to take the bottom of your range and place it on the top, and here is going to tell you the discount. So if we were really bullish on the day, I would expect this to come back down here, touch somewhere inside of the zone, likely bouncing off of a PD array like displacement, like a fair value gap, right? And then continue to pump upwards. So that's what I expect to see. That's what I want to observe if we're really bullish for the day. But in this moment, I want to take a trade because I recognize that we've pumped up, since market open, we pumped up from 20,040 ish to 20,273. That's a $230 move. And that is very, very unorthodox in my experience of trading. I think that that's a little just too aggressive. And so what I'm expecting to see is an aggressive rebalance as well. So even before we get to discount, there's good opportunity to trade here because, again, I know I'm bullish on the 1 hour. I know I'm bullish on the 15 minute. I know I'm bullish in the last 30 minutes of market open, but I'm dropping down on the 1 minute, and I need to recognize that time and price tells me that if I flip my bias to bearish for a few minutes, I can catch a good trade. So that's exactly what I'm looking for now. So as soon as this goes down, I write this down as a market structure shift. That's in a few minutes, actually. So let's wait on that market structure shift. The first thing I'm waiting for is for that aggressive rebalance, right? So I don't want to just see this candle close red and then immediately take a short. That's not what I want to do. We still need to stick to our game plan, stick to our recipe, stick to discipline and good habits. So I know it wants to rebalance downwards. The thing is, I don't know exactly how it's going to do it. So don't just see a massive move like this up and just immediately do a short as soon as it comes back down. It's a terrible habit. It's the same thing as seeing these candles like pump upwards and then just buying in right here because you think it's going to keep going. Yeah, it may keep going, you may make some easy money, but you're not practicing any good habits during that, so it's just there's no point to it. So Right here, we're around 1017, so we're coming up on our first trade. So our first trade was at 1021, right? So I see this move down. I pretty much have my first bearish displacement of the day. So I very much paid attention to this, and now this is when I'm, seeing some kind of rebalance happen. I have another fair value gap that I just wrote here. It did get disrespected, but at the moment, I did not know what was going to happen here. So I'm looking to take an entry here, and this is why I made my first mistake, because again, I'm not waiting for enough price action. So let me show you what I mean. So look at that. Look at that candle. Let's play it slower. So it's already 1021 right here, right? So I get in because I want to see this fair value gap touched, right? So I put my entry right up here, right? Because I know in the back of my mind I really wanted to touch this fair value gap because, you know, if you guys aren't very experienced with displacement and fair value gaps, they're essentially the same thing. When you have displacement, you have a gap between two adjacent candles that has not been tested whatsoever because of how strong the move is. That's just the definition of displacement, and that's the definition of where a fair value gap comes from. Now, another thing to know is that when you have more than one aggressive move like that, the ones you want to trade off of are the ones that are in a higher discount zone, right? So like that's why I drew this Fibonacci retracement right here. So remember that first one I said, if we're bullish on the day, we're going to want to rebalance down to that 50 to 61.8% range. So the same thing is true when I'm bearish. When we make this big drop down and I see another low placed here, I see two lows, that tells me equal lows. We're going to come back down there very, very soon, right? But I don't know exactly when. So that tells me if we leave these lows, we're going to come back up to one of these fair value gaps, test it, and if we hold, then we will come down and take that sell side. But I don't know which fair value gap that's going to do. So if you can't guess already, you want to do the fair value gap that's safer. So I want to be trading off of this fair value gap instead of this one. And that's really where my first mistake came in of the day. If you guys can't see this retracement zone, it's just because I put it like right next to it. There's some space now. So this is what I mean. So that's the top of that move. As soon as we start rebalancing down, we drop down to here at the lowest. So if I want to get into discount, if I want to get a good price for a move back down, I'm going to wait for it to come into this zone, right? I want it to be in this range with this fair value gap. That's confluence, guys. That's things matching up with my bias. And this is the kind of trade I want to take, not this, because this isn't in discount, right? I haven't even seen this fair value gap get tested yet, and it's just too soon to take a trade. So we can get rid of this now. But regardless, I wanted to take a trade there, and I tried it. So I put my entry right here, put the risk up just a little bit higher, and in reality, I'm pretty sure my risk was actually more like up here because that's a pretty ridiculous risk to reward. So I know that my risk was probably up there. But what happened was I exercised good discipline on this trade because I may have taken a bad trade. I may have not waited for it to be in discount. But I know without a doubt if my fair value gap is getting disrespected, we're not in a good trade. So as soon as I saw that fair value get disrespected, I immediately cut out of the trade immediately. And that's exactly why my risk was right there, and that's how I left it. So that's why I only lost 125 instead of the 36 ticks, which would be more like 180. So I did limit my loss just a little bit, but you know, it was a bad trade, but I exercised some good discipline. So it's a good thing to go back to these trades. It's a good thing to go back to the market replay, review your trade, because you will notice things like this. You will see exactly what parts you did right and what parts you did wrong, and that's basically the breakdown of that trade. So I can get rid of that fair value gap. I knew that was disrespected. I'm gonna get rid of this trade. I knew I lost a little bit of money, but guess what? I recognized all of this as soon as I made that bad trade. As soon as I got out of the market and exited, the first thing I thought about is like, oh, maybe I should size down, right? Because I've already had my first loss. But the only reason I didn't size down was because I was very confident in my bias. I was confident in my strategy. I knew what I was doing was right. I just knew that I had jumped the gun, right? I'd been too hasty, and I should wait for a little bit more price action. And look what happens right after I do that. We test a fair value gap. We touch up here. I get in the trade right there. This little red gap is because of a 15-second fair value gap. So let's drop down to the 15-second, because as soon as I have my 1 minute fair value gaps, I'm pretty much going to the 15-second time charts instantly. So I have my 1 minute fair value gap. The other one got disrespected, so we don't care about that anymore. And this is when I wrote my market structure shift. And this is the point I'm trying to make. You need to wait for enough price action to tell you that the market has shifted. This move downwards is nothing but a rebalance. It's nothing but a setup for what's coming next. That's why these lows are placed here, and that's why it comes back up, because it's setting itself up. So that's when you finally see this market structure shift, when you finally see that it's placing a lower high, right, and we're going to take a lower low, I can already assume this is a market structure shift because these equal lows are telling me we're going to go down there. It's this lower high, though, that really tells me we're going to go low. Because right here, we did make a low, right? We did start to rebalance. But what if we just shot all the way past up here? We would have just lost so much money, and we wouldn't have known if the market had really shifted. So this is when you truly know that the market has changed structure, and this is when you know that you want to find your displacement, find your discount, find your entry. This is exactly what I mean by my recipe. This is what I want to rely on every single day I trade, because these setups will happen so frequently. They will give you money so much more often than they won't, that there's no reason for me to take a trade like this. There's no reason for me to, want to. It's the same thing with this. It's like when it's pumping upwards, so long, I don't want to be getting in towards the end of this. Even if I'm going to make money, it's just a bad habit. There's no high probability about it. This is completely different. I've waited for it to retrace down. I've waited for it to put those lows, right? I've waited for it to disrespect the fair value gap, come back and test the one that's actually in discount, right? The one that's actually a higher probability of coming back down, right, after it touches it and respects it. And then finally, I have a market structure shift. So there's just really no reason for me to size down on this trade. And that's why I didn't. I just knew that I had made a mistake in taking a trade too early. So this is one exception to the rule where, I know after this trade, win or loss, I'm sizing down no matter what. But in this case, I just knew that I had made a silly mistake and that I could easily make up for it. So again, first thing that's really important, place good risk. I don't want to just place my stop at the top of the fair value gap, because like I said, the 15-second is very unforgiving. The wicks don't count, guys. The wicks don't count. This wick so much higher than the fair value gap, but it's still respected because it never closed above it. Never. So, and that's what I mean by this other trade, is that I saw that fair value gap that I had made. I saw it close above it, and that's why I immediately got out of the trade, because it just immediately went to my stop loss anyways. So I'm glad I caught that move just seconds before it did it. And so that's why when this happens here, I'm ready this time. I'm ready. I know where to place my risk, right? I'm placing it a little bit higher than this wick here. And I'm placing my take profit down here. Remember yesterday how I talked about overconfident take profits? The right amount of confident take profits and underconfident take profits. In this case, this is the right take profit, right? Because I know these are equal lows. I know they're getting hunted. In my mind, I remember during this trade, because I was staying on the same size, because I knew that I was making an exception, because I genuinely had confidence in my buys for the day, and I knew what my mistake was. Part of me wanted to just put my take profit right here, just to be safe, right? But guess what? Today was not that day. I knew what to do today, right? I knew the right spot to put my take profit. I didn't want to drop it down here either, even lower, and try to go for a monster runner. I just knew exactly where I should have it, because I have price action. I have everything I need. I have the confluence. So I'm in the trade now. It goes well pretty quickly. Pretty exciting to see. I had a little 15-second fair value gap here as well. So even if this fair value gap went wrong, even if this was getting a little iffy, I have a new fair value gap to be tested, and it did not even get disrespected. So I'm just fully aware now that my trade is going to go well at this point. So, after this happens, of course, I'm moving my risk down while I'm doing the trade. It's more like down here now when I'm doing it. We're adjusting as we go. Remember, you do the work up until the trade, and you're in the trade now. but it doesn't mean you just have to walk away from the computer. You can still adjust your risk as you see price action. You can still adjust your take profit as you see price action. Those are all good habits to have. The only thing you don't want to be doing is just wussing yourself out of a trade. You don't want to just be, crossing yourself out of a trade. You want to do things that still support your bias and show your commitment to the trade. So just remember to know that difference, because sometimes you'll get it mixed up, and you'll be too iffy to know what you're even doing. So just a few minutes in this trade, and we basically pumped downwards and hit take profit pretty quickly. So we're just gonna wait for that price action to play out, and boom. Right? Notice how it goes lower as well, but we don't care. We don't care because we know where we want to take our safe take profit. We know where to place the right amount of confidence, because if I place, an overconfident take profit like down here, guess what? I just lost so much profit because of that. So again, that's why that's a good habit. So now we can get rid of this. Um, I think part of my recipe as well is like I don't want to be over testing fair value gaps, so I really have a habit of just deleting my fair value gaps after I watch them get tested, because I think it's a bad habit to expect your same fair value gap to just be retested and retested and retested and expect it to hold. So I think fair value gaps and displacements are kind of just one and done. So it's good for charting, it's good for cleanliness. I have no issue with that. So um, after this trade, that trade on its own made me $635 because I had really good risk. I had a really good take profit. I set myself up for success, and boom. If I had stopped right here, this is an A plus day. This is an example of an A plus day. Doing absolutely everything right, that you recognize your mistakes, you recognize what you need to do, you adjust, and boom, you make your money. This is the perfect time to just walk away from the computer. Who would not be satisfied with $500 for the day, right? Apparently not me, because I came back later for no reason. I had to final to do. I had things to do. Like I had plenty to work on, and yet I was just so hungry to trade. I was just so hungry to trade that I was just kind of keeping track of the price action even after. And it was kind of just because I knew that this pump up was just so juicy that the price action was going to be really nice. But at the same time, man, I caught my move. I made my money for the day. There was no reason for me to continue trading, and that's kind of why I'm happy I did that at the same time, because now I can make this video about that. And I hope that some of you can watch this and recognize when you do this and just not make that mistake all the time, because it's really just unnecessary, to be honest. We can just turn off market replay at this point because I don't know what's going on, but let's go back to that moment in time around 10 o'clock. Okay, so boom. So we had discount for bearish. I was pretty much just looking for another short to take. No reason for that either, like I said. I at least had the discipline not to take a trade immediately right after that. I was kind of happy with what I did in the moment. Again, just huge displacements downward, huge things going on. So remember how I saw on the news, we had one more piece of news at 12 o'clock, and I think this was a really big part of the reason why I just couldn't walk away from the computer when I was up $500. It was because I knew another piece of news was coming, and I really just wanted to, test my abilities of trading through the news. So I recognized some accumulation was going on here, which played into that as well, because I knew as soon as the news came out, that's when the action was going to happen. Let's just get. Okay, so I know what that is. I drew a little SMT here. This kind of was telling me this is a good example of when I don't know if an SMT is right to draw or not. If you don't know what an SMT is, again, it's just when ES makes a different move than NQ on the same respective time frame. So within this time to this time, NQ takes its low, SMT doesn't. So that's what an SMT is. But this tells me that we're kind of bearish. So what am I thinking with that, right? I know news is coming up. I know we slowed down. I know we're accumulating. So if I think we're bullish, that tells me that we're going to make a big manipulation move downwards before pumping up, right? So news comes out, boom, 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 manipulation. And this is why I did not need to trade. I was just so eager to trade. I was so eager to just further my win. I at least knew to size down, right? So we learned from the last time how good sizing down was for me. And I'm glad I walked away with that, and I still implemented that today. But what I didn't have to do was just be so eager to trade. There was no reason for me to take another trade today. Um, and the way I tried to take this trade was that I recognized that we were going to make a manipulation move down to then pump upwards. But again, I don't know when that's going to happen. I just assumed because we took a 5-minute sell side liquidity that we would have immediately started to retrace up. And that's just prediction. That's prediction versus observation right there. And that's the mistake you don't want to be making. You want to be observing at all times. You don't want to be predicting and trying to make a move too early before it happens. So that's exactly what happens here. We make a little move up. This is making me think that we're having another market structure shift. When again, I don't have enough knowledge for that. I'm not sure. I have a little fib retracement here. I'm expecting it to come down into discount and then, pump up with the fair value gap here as well. And I'm assuming that's exactly when I took my trade, 1234. Yep, right here. I tried to take a long, and it wicked me out almost instantly. And I remember even adjusting my wick to be a little bit lower just in case it was really going to make that move upwards. And again, that's just me extending my risk for a hunch, for a prediction. That's a bad habit. And that's why I went from an A plus day to only having a B day. That's how harsh I am on myself, because every part of me knew not to do this. And yeah, I did it. So it has to happen sometimes because you won't learn until you lose the money. You just won't. And I'm just trying to convince myself basically in every way possible with this charting here with those fair value gaps that, we're really about to pump up. And I just know I'm wrong. I know I'm wrong as soon as the trade ends. I know I'm wrong making this video. It's silly, really, but it has to happen nonetheless. So 1234, right around here. Like I said, fair value gap. I wanted to get in a discount and it didn't work. So now that you see that sometimes, even when you have confluence, even when you have a fair value gap, even when you have the discount range placed, even when you think everything is lined up for you, it still may not go the way you want it to. It's the you're trying to predict too much. Those were all there because if we were bullish now, if we were going to go up, that is what I would observe. And instead, I'm putting it all there because I want to predict that that's when it's going to happen. That's what is going to happen. Notice that big difference. And the reason why I really didn't do that, and the reason why it made so much sense to me as soon as I took that trade is because, look, I want you to see this. The same way that if we went up and we had to retrace into a discount to continue moving upwards, the same is always true for the other side. That's why you want to be an ultimate observer, because I should have taken the moment to observe, hey, if we're bullish, this would happen, right? But at the same time, if we're still bearish, it has to do this as well. So that is why I truly, truly knew that I was just being way too hasty to get into a trade. Because if I had just taken one more minute to draw one retracement pattern for the other side, right? For the other side of the observation, for the other bias, I could have easily avoided this trade and just waited for some more price action. And look, I wasn't even wrong. Because as soon as we make this true manipulation move downwards, this is the true manipulation move. This is why I was predicting, because I thought this was it, when it's in reality it was this. I didn't wait for the structure shift. Me trying to think that where was it? 1234, right? Instead of me thinking that this was the structure shift right here, it wasn't. It was this. This was our structure shift. That is when we start to make new highs and higher lows, right? So this is our real manipulation move. We probably had some displacement there, and then we probably pumped up. That would have been the real place to take a trade. And guess what? I'm glad that at this moment, in this moment, even here, this wasn't. There's really no good trades to take here. There's an order block. Pretty much this is your best chance at a trade. The lowest possible manipulation. You have a small order block. We bounce off and we go up. That's pretty much all there is. And we didn't even come up to this like good take profit. I mean, this is pretty much the best take profit you're getting. And this is a pretty choppy trade to take. So even so, I'm glad that after I took this loss, I immediately woke up and I said I'm making silly moves, and I was done for the day. I only gave back 100, right? I sized down, so I did not give back $220 and said I only gave back 110. So again, we have a really good day and we don't give back even half of our money. So this is why this is a good habit, regardless. That my mouth got so dry, and I reached a 30-minute recording limit. So um, just took a few minutes to make sure I wasn't yapping off about nonsense the whole time. But on that note, my goal isn't to make these videos super super long, but I recognize that when I take a trade, there's so much that I want to talk about, so much I want to go over, so much to learn that they just usually end up being over 30 minutes. So um, anyways, regardless, as I was saying, regardless of how this last trade goes, that's why it is a good habit to size down for your last trade, because you're not going to give back all the profits you made. And if you do end up making money, you're only going to make your day better. Same thing is true on the other side. If you lose some money and you size down, you're not going to lose double your money. And at the same time, if you make some money back, you can completely come back to break even and just have a neutral day. So that's pretty much all I have for the trades today, though. Again, I would not have even made a 30-minute video had I not done this, but I'm glad I did, because it's something that I know all of us do all of the time and we're still not profitable, and it's something really easy to just catch and fix in the future. So, on that note, I hope you guys enjoyed this video. When it comes to the weekends, this is really the first weekend that I'm the first weekend that I have a YouTube channel to make videos for. So if you guys want to see anything, any kind of content, um, the weekend is a perfect time for me to make videos like that. Like if there's stuff you guys don't understand, if I go really fast, or like they're just basic concepts that you guys don't know about and you just want to learn more about, just leave a comment, because this YouTube video really is for me. Like I use this because just speaking to the camera, it's a form of accountability, and it's a way for me to just further remember the habits I'm having, and the things I'm doing while I'm trading. But in reality, I know you guys are watching this too. I know some of you are interested in what I'm doing. I know some of you are new to watching this. I've never had a YouTube channel before. So if you guys are interested in any kind of content, you guys want to see any kind of thing, the weekend is a perfect time for me to go and make videos like that. Nice, short, sweet videos. Nothing like this, not 30-minute plus videos about my trading day. Um, I may go back into the market to past trading days, but if I'm just going over simple concepts, things that you guys just want more rehashed, like for example, my recipe, or, my psychology, or when I'm doing math, or just stuff like that. Those are easy for me to make nice little quick videos, and just keep putting content up. So that's really all I have to say for today. So I hope you guys enjoy this video. Please leave a like, comment, subscribe if you guys want to see more, and yeah, just have a good weekend.